The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 24th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone's having a great day out there. Let's make sure we do everything we can to have a great day. Now, look, this show is going to be a little bit different than it has in the past. I have absolutely no internet service, which means charts are pretty tough to come by. I can't connect into the TigerTV, the Tiger's Den, or anything along those lines, but I do have enough data here to at least be able to share with you an overview of the market, some price points for you to be watching live with regard to today's close, and I'll just share with you as much as I possibly can. You can give us a call if you'd like, and I'll do what I can to answer your question. You do that at 877-927-6648 internationally. 727-445-1044. So let's persevere through these technical difficulties on this wonderful Wednesday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes. Welcome to the show. The Dow is up around 30 points or so. The S&P up about 1.5 points. The NASDAQ is up about 8. The Russell, I think, is down just about a point or so. I think gold is off somewhere around $2 or $3. Silver maybe down a penny or two, so kind of flat out there. Light sweet crude was down about 33 cents maybe 10, 15 minutes ago. My internet connection kind of is intermittent, but right now it's on the mitten side of inter out there. Intuit, the accounting software company, they're having a nice day. They were up about $9. Triumph Group Inc. was up $6. That was about 27%. Tesla was up about $5, up 1.5% out there. Stamps.com was up $6. To the downside, you had Tiffany and Company up 8%, about $7.50. Ulta Beauty Salon down 11. That's about 3.5%. Advanced Auto Parts had another bad day, down nearly 5% out there. At least it was, as I say, as about 15 minutes ago. So let's talk about the markets out here. Now, yesterday I kind of went through probably a good 15 minutes or so, and we're not going to do that again today necessarily. But with regard, it's always good, in my opinion. I want to try to be as clear as I can with regard to the markets, what it is I'm looking at, what I believe the stock market charts are communicating to us, so that you've got the proper perspective. So long term, these markets are going to go much, much higher than where we're trading at right now. What we also know is that the market is long overdue. I won't say long overdue. It's overdue for a correction. We haven't had one for maybe, 14, 15, 16 months, something like that. Typically, on average, they occur one every year. The market is actually overdue for for what we'll call a bear market retracement, the bear market retracement being 20% or more. Although I don't see that on the horizon because the patterns, the signals associated with that just simply aren't present. Now, we have entered what's referred to as the unfavorable seasonal cycle. You see, if we break up the markets, in fact, I'm going to give you my take on favorable and unfavorable. The unfavorable seasonal cycle begins about May 19th. Today is May 24th. It lasts through October 13th. So we go May, June, July, August, September, October. It's basically 5 months. I forget the name of the gent that really classified the calendar, the cycle, the seasonal cycle into 2 6-month periods of time. But if he were redoing that, which I'm redoing that for him, and would go back and take a look at the last 85 years, what we know is on average that the Dow, we're speaking about the Dow, hits the top around the middle of May. Not May 1st, not May 30th, but May 19th to be exact. And then what we also know is on average the Dow moves down into October. Now, along the way, there's bumps. There's rallies, counter trend rallies. There's moves to the Dow. All of that type of stuff out there. So that's what we know about the general market. Having that as a framework, then what you and I like to do is go apply pattern tools, pattern recognition tools, to see what signals are coming from the markets out here. Are there any signals that would go ahead and complement that seasonal cycle around that May 19th timeframe? What we also know is that we go back over the last 85 years, we look at the first term of every new president, and we put all of that together. What the Dow actually does is it forms a top near May 22nd, not near May 22nd, on May 22nd, to be exact out there. So we know that we are in this, if you were in the ocean swimming, we know that the tide is starting to turn against us. So if we were to see some type of correction from here, don't be getting caught up into it as this is it, this is the big one. It's not that. It's just would be normal. Doesn't mean that it's even going to happen. But what we do is we start going and we start taking a look at charts to see what patterns are present. Now, knowing that we're coming into an unfavorable seasonal cycle, some of the divergent patterns that are out there would also be normal. You know, it's like the market, which is a group of participants that you and I, right, buyers and sellers out there, are aware of this. Now, maybe not everybody, but certainly you are now aware of this, and you may have been aware of this before I shared this with you here today. So people start to get maybe a little bit, what's the word that we should use? Is it jittery? I don't know if it's jittery, but they start to anticipate. Let's just call it the ketchup commercial out there. And they're doing a little bit of anticipation. Therefore, we may be seeing some of these divergences because this is what people expect. Of course, Inspector Clouseau would say, when you least expect it, expect it. Well, right now, it's not when you least expect it. It's when you most expect to see some type of turn. So what types of things are suggesting a top or not? Well, one of the first places that I like to start with, and if we were live, we would be taking a look at my 4 charts, 3 of which will show us what the advanced decline oscillator reading is from a daily perspective, which is doing nothing more than take a look at that data and comparing the last 39 and 19 days and going ahead and plotting a signal. Now, those signals, when they are above zero, and depending on when they get above zero, they communicate to you and I who is in control of the market, buyers or sellers. So always good to know that. If a market is going to fail, it's going to show itself. Now, what you and I are not interested in doing, even though we'd be interested in doing it, we're not going to be interested in doing it, which is trying to sell the exact top tick. Instead, what I'd rather you see is a confirmed change in trend, and then you jump on board. Because let's face it, if we have entered the unfavorable seasonal cycle, May 19th, May 22nd, today, May 24th, whenever it begins, and it really rolls down, in essence, into around October. In this case here, I'm not saying that. The next train station ticket is actually June 25th, I believe, this year, June 25th. So if the market's going to move lower, you don't have to sell the top tick. You just want to wait for a confirmation that the market's going to move lower. Now, we don't have that today, but we'll continue with our chartless view of what the markets are. I hope this is making sense. See, this is Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 40 years ago, if you were going to go on a vacation, say you were going to go from Detroit to the Smoky Mountains, something I had done many times, you would go to AAA and you would get the triptych. Not that you didn't know the way down there. I mean, it was pretty easy. I-75, a straight shot. But you wanted to know where the traffic was. But you would have a triptych. Now, today's technology, you don't need that triptych, right? All you need to do is plug your phone into your car, go ahead and pop up a Google Maps to see exactly what the traffic is so you can kind of get around it. Well, today we're doing the triptych version of the markets. We're doing it the old-fashioned way. And I'm going to provide you with some data, sets of data for you to be able to analyze live on your charts because I don't have a connection. But that doesn't mean that I can't provide you with extraordinary, useful data. You can't see my charts, so that just means actually you have to listen twice as hard out there. So sometimes that might work to your advantage as well. So we were talking about the advanced decline oscillator readings, which are all above zero for the New York Stock Exchange, NASDAQ Composite, and the Dow. Now, in the case of the New York Stock Exchange and NASDAQ Composite, at the end of today, they would need to have 682. That would be the New York Stock Exchange. NASDAQ Composite would need 493. Both of those are net declining issues in order to get that oscillator reading down below zero. If you were to see that at 4 o'clock today or shortly before 4 o'clock, the message there would be, okay, you can go ahead and take a short trade in the market. And then, by the way, the NDX 100, I don't have the number for the Dow, by the way, how many stocks need to go lower. It's probably, well, the Dow, we'll talk about the Dow in a few minutes if I can remember to do that. In the case of the NDX 100, it really has to have a bad day. It needs 33 of the 108 or 107 stocks, I don't know which one it is, not 100, but 33 of the 108 that are in there need to have so it needs a net declining issues of at least 33 at day's end in order for that advanced decline oscillator reading to get down below zero. I don't know if that's going to happen. It's not likely that we would see that at day's end, but anything, of course, can happen. So what does that mean? That means the signals inside those indices are still telling you that buyers are in control. So there's no reason why this market can't just stay sideways or even push itself further. You've got a volatility index that got down into that 10-ish level, the exact target that you and I had identified just simply, 4 or 5 trading sessions ago, last Wednesday, last Thursday, when that volatility index was in the 15 area, moved just slightly higher on Thursday. You and I we knew because of the patterns that were out there that the spot volatility index was going to get down into the 10 level. And voila, that's where we got to yesterday. We've gotten even lower today. Actually, today was when we really hit the number that we were looking for. And that doesn't mean that there's a market top. It just means that there's basically gobs of liquidity. Now, there's been gobs of liquidity to be able to push prices higher. People have said, well, we are pushing prices higher with no volume. And they're absolutely right when they say that. But that's just one aspect of it. If I told you, if you were interested in buying, I don't know, what do you want to buy? Some type of car. Let's say you wanted to buy a sports car. Which sports car you want? Let's say you wanted to buy a Ferrari. And you just learned today that Ferrari was cutting its output to the U.S., its distribution to the U.S. by 50%, cutting its output by 50%. That means they're going to sell 50% fewer cars, new cars, this coming year, right? 50% less than what they sold last year. Not because of demand, but just simply because production was lower. Well, in the case of the stock market, production has been lower because companies have been out there buying their stock back. So do you need more or less volume to push up the price? Do you think if there was going to be 50% less cars imported to the U.S., do you think that you could raise the price? Absolutely. Why? Because there's still demand. There is still demand in this stock market. Prices will continue to move higher in the stock market as long as the float continues to dwindle. So price and the volume aspect of it is just one element. Now, that doesn't mean that there aren't problems. But many people will talk about the lack of participation in this market. That is just absolute 1,000% BS. It is all before Steve gave you this information, which is yesterday, which is today, that the New York Stock Exchange advanced decline line is at new all-time highs. It has been hitting new all-time highs almost every day. Now, obviously, last week on Wednesday, it took a little bit of a detour, but it just took a few days in order for that advanced decline data to get back to new all-time highs. We know that the equal-weighted ETF inside the Qs, even inside the S&P 500, the SPYs, in the Qs, you're at new all-time highs. In the SPYs, you're close to it. Is there a volume issue? Absolutely. Positively. 1,000% there is. In fact, in the case of the New York Stock Exchange, there is a slight problem. There is a problem that's typically associated with short-term market tops, and that is where the advanced decline line makes higher highs. But the volume summation index, which you can't see, but it's just a summation of all the prior day's volumes out there, they are not making new all-time highs. It's a bit troublesome. But it's what you also anticipate going into this unfavorable seasonal cycle. So how do you put that together? How I'd put that together is wait for that advanced decline oscillator reading to close below zero before you would go ahead and pull a trigger out there. Because otherwise you could have a meandering market moving sideways. There's no reason for you to get involved with the chop. Again, if this is a market that's going to turn for multiple weeks out here, so from your intermediate term trading, you would be going from bullish to bearish out there. You don't have to catch the exact top. You just don't. There would be enough room for the markets to move down. Now, where's it going to move down to? That's something later. First, we've got to get there. We're not there just yet. Now, interestingly enough, with regard to the New York Stock Exchange, I was surprised that nobody actually sent me an email and brought this up to me. Because back on the trading day when the New York Stock Exchange, May 16th, didn't get to a new all-time high, but it was taking on the all-time high, I believe, of the date of, March 1st, right? So you guys can go check it out and make sure. But on March 1st, that's when the New York Stock Exchange made its all-time high. But as price got back up there, back on May 16th, what actually occurred on that day was the following. The new highs inside of the New York Stock Exchange was 178. Now, by the way, that 178, even though it's new highs, it's kind of been in declining tops, all-time highs, or new 52-week highs. But nonetheless, it was 178. You know how many new lows for the new lows over the past 52 weeks? That was 60. Now, when you have new highs and new lows that are greater than 45, that is item 1 in the old Hindenburg Omen signal that's out there. You also need the New York Stock Exchange to trade above the high 50, and I mean exactly 50 trading sessions ago. Well, 50 trading sessions ago would take you, I believe, to the date was March the 6th. I remember that day very well. This happens to be March 6, 2017. So, in fact, the New York Stock Exchange closed above that. And that advanced decline oscillator reading that you and I were just taking a look at during the first, now part of the second segment, it was below zero. In fact, the reading was around minus 127. That qualified as giving you a Hindenburg omen. Hey, did the last one work out, or how did it work out, the one from March 7th? Not very good. How about the Hindenburg omen signal there from December 1st, 2016? That didn't work out very well either. Maybe this one. Maybe it is the third time's a charm. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Welcome back to Steve Rhodes with the Trader's Edge Show. Unfortunately, no way for us to show charts today. I've got some internet issues. Just waiting for Comcast to show up, and maybe it's just replacing the box. I hope it's something simple out there. But in any event, of course, they told me, can you be there between 1 and 5? Where else am I going to go? So just waiting on them to arrive. But hey, interesting enough, I saw, of course, dealing with these situations and wanting to keep track of what's going on in the market. I saw Robert Schiller was on CNBC, and thank goodness he actually was on. I didn't hear the complete segment. I just taped it out, listen to it maybe later on tonight or some other time. But I heard enough. When I say heard enough, I heard him finally, because months ago people were talking about his indice out there, about it being up near all-time highs. That was the signal, supposedly, that the market was going to crash, that the next bear market was going to start out there. And I was like, what are you guys smoking? You're not looking at the other aspects of the market out there. Finally, he was on TV today saying, I can make a case for these markets to go 50% higher. He said he could make a case for them to go 50% lower, too, but he wasn't hanging out in that 50% lower camp out there. And so he was, in fact, what were the reasons? He was just basically using many fundamental reasons out here that you and I have been talking about for months about the ability for the market to go higher. Now, the beauty of that is that combined with the lack of signals that call significant market tops out there just supports what it is that both you and I anticipate over time. What we're taking a look at today is maybe the shorter term, maybe the intermediate term. What is it that you actually need to see in order to get some type of confirming signal or potential confirming signal? Now, but with the spot volatility index moving lower today, I believe it was down by about 30 cents or so from yesterday's close, that's moving in the wrong direction. What you like to see is you like to see a rising bottoms pattern out here. You like to see the spot VIX index on a closing basis move higher, and the S&P 500 doing the same thing, move higher. Now, it's a flat S&P. Flat works, flat or higher, with a rising volatility index. We don't have that. That usually can take several days, at least a couple of days, to form out there. That's when you can see a nice little top form. So we don't have that in place. So if, in fact, we don't see those advanced decline numbers turn that oscillator down below zero, then it wasn't certainly May 19th. It wasn't May 22nd. And guess what? It's likely not May 24th either when that market top will be in there. Now, other levels for you to be paying attention to. Look, if this market is going to croak, I'm pretty certain that the semiconductor, the stocks index are going to participate to the downside. Now, it's got a long ways to go. Well, I can't say long ways. You determine if it's a long ways. It's really 10 points. I guess that's not too long. It's only 1% below where we're trading right now. Well, I think where we're trading, which is somewhere around the 1070 level. But the number you'd be watching for today, give or take a few shekels out there, is going to be 1060. It's really like 1060.71 or so, but that last two digits is going to change. But 1060. So right around 1060 is where you would need to see a close below in order for that to give you the potential sell signal. If you don't get a close below that, no, there's no sell signal. The transports, right? If the markets are going to go lower, the transports certainly are going to go lower. And, hey, look, they've been in a downtrend ever since about the beginning of March, end of February out here. But as I speak to you right now today, price yesterday closed above that oscillator unchanged line. Says, hey, it could even have more of a counter-trend rally. However, today, at 4 o'clock, if you were to see it close below 89.68.17, let's lose the pennies out here. So we'll call it 89.68. Well, then you'd have another signal, the type of signal you'd be looking for. Inside of the NASDAQ composite, we actually have price trading below. I think the composite was up like about 5 points. I think somewhere around 61.43. The actual number is 61.49. So the NASDAQ composite is giving us a possible signal. That's why you really need to have that advanced decline oscillator reading get below zero. That's what you would like to see. So remember, at day's end, 493 net declining issues inside of the NASDAQ composite, which has been the strong indice out here, would actually give you that initial sell signal. Now, whether or not you're going to get confirmation, which is follow through on the next trading session, I can't say. But if you did, that would be the magical number. But would I go ahead and if price is trading below Stevie's red line now and the advanced decline is not, would I go ahead and take the short trade if you were going to begin a position, I could see it, but you can't even trade that indice. So the answer is no. The answer is absolutely, positively, 100%, no, 200%, no, 1,000% no. You don't have the signal. In the case of the Dow, which is up 39 points right now, and the Dow could easily, well, look, I can suggest to you that the Dow could easily gain 29.52. You do the math. 21,010 minus 29.52. I think that's about 58 more points. The Dow should have another 58 points in it moving to the north. I don't know if it will, but it should have another 58 points. Now, if you were to see the Dow close below 20,929 today, in combination with all of those other indices closing below the levels that I gave you, having those net declining issues out there, folks, that would be confirming signals. Of course, inside the S&P 500, you would want to see it close below 23.95. Now, 23.95.97 is the exact number, so 23.95, we'll call it 50. But it closed below 23.95, well, that would be another element to add to the mere fact of this unfavorable seasonal cycle, that the signals are now starting to form out here. So even though I believe that these markets, that all the charts, all the patterns, everything is adding up to a market that is going to be much, much higher, much, much higher by the end of the year out here, that still doesn't mean that the next decline can't occur. Remember, whichever side of the trade it is that you are on, make sure you're investigating the other one fully. Don't and make sure you have listed on a pad of paper exactly what it's going to take you to go ahead and change your view of what the markets are communicating to you and I. In essence, that's what you and I are doing. Today, we're forced to do that without visuals. I'm forced to try to explain to you as best as I possibly can exactly what you look for. That requires me to be laser focused, give you numbers that you can look at, probably better than if I actually show you the numbers, because you're probably writing them down on a pad of paper saying, Stevie says these are the numbers. And if you get all that together, folks, that actually makes making the decision of what you're going to do on an intermediate term basis very easy out here. Long-term basis, you already know the answer. You're just staying put with it. You're not even going to try to time the market, because the timing of the market says it's going to be higher at the end of the year versus where it is that we're at on May 24th out there. Is there any other signal that I need to give to you? New York Stock Exchange, did I give you that one, 11,575? That's the number to put down on your pad of paper out there. Well, Russell, how about good old Russell 2000? What's that number? Well, you're trading below it right now, and we know the Russell is kind of weak out there. Hey, if you're going to go short, not a bad place to be looking. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Hey, let's round this off here. Let me give you the numbers inside the sectors for the S&P 500, in case you wanted to go ahead and take a look at, or you're in some of those sectors. Inside the XLF, the financial sector, you'd need to see it close today below 2347 to give you that potential sell-type signal. Inside the healthcare sector, the XLV, it's right around the 75.42 number. That's what I've been looking at. Inside the XLK, you're pretty much, it's trading, I think, right on it or very near it, right around the 55.82 level. That's what you would need there. Inside the XLY, it's already trading below that level, or at least it was. Inside the XLI, the industrials, 66.60 is the number. So that sounds a little devilish out there, but that's what you would be looking for. Inside the consumer staples, XLP, you'd be looking at a price point of $55.44, give or take a few pennies out there. That's what you would need to see there. Inside that real estate sector, XLRE, we don't talk about that too much. Maybe we will. 31.75 would be the number out there. And that was moving higher earlier, at least, maybe an hour ago or so. So with some bad numbers that were coming out, mortgages, or I don't remember the exact numbers, housing numbers. Oh, maybe it was Lowe's and other stuff like that. That sector is doing okay. But 31.75 says not so fast. The utility sector, which has been on fire, looking at 52.24. And it's appropriate to give you this data here today. You've got the release of the Fed minutes here at about 2 or 2:30. I don't recall the exact timing of it. So there is possible that we'll see Action Jackson, by day's end. 67.29 is the number inside the energy sector out here, which has basically been god-awful horrible. But it's worth taking a peek there, to try to find some type of turn just because of the way that it has been beaten down. The XLB, the building materials, you're looking at about 52.70. Yeah, 52.70 is a good number inside of it. So that takes care of the numbers, the closes below that you need to see in order to start to get your skirt into a tizzy. Now let's switch over and take a look at gold. We know that gold yesterday started to move lower. I did that Tom show from 3 to 4, and we had a couple of callers where we were taking a look at gold and what should we do, what shouldn't we do. And my suggestion was to wait for gold to get down and test Stevie's red line. Now, as we speak right around now at 1:45, it's going to be somewhere in the 1246, 1247 level. Gold got pretty close to that, almost close enough for me for that to occur. Although what I would anticipate is that we're going to see gold kind of just rock back and forth here for another couple of days so that the price oscillator that you and I were looking at for gold will get to zero. And that's where we really want to see the test come in. We want to see one more little pullback in the Stevie's trampoline line. We want to see that red line hold, and then that would suggest that gold would be ready to take off to the upside. Likewise, if it were to bust down below Stevie's red line, that is a bummer. That would be a real bummer because it says, oh, I may want to take a run, I being gold, all the way back down to the previous swing point, or maybe even form an A to B equals C to the downside. I don't know which it would be. What I just know that it would be is bad news bears out there. So watch that 1246-ish type area, and you'll know if you see a close, not by pennies or a dollar or so, a close well below that level, that spells problems, at least for gold. What is it going to do inside the mining equities? I don't know. You have to take a look at each one separately out there. In the case of silver, high-ho silver needs a much greater fall than gold does to go test that red line out there. You're looking at 1665, give or take, and we just haven't seen that. So silver's been stronger than gold, at least in relationship to the test that it would need to be. Gold is actually stronger, so don't get me wrong out here. Or you can get me wrong. Let me just restate it. In the last few days or so, silver has been stronger than gold. Gold is the horse. Gold is the horse you want to ride out there with regard to giving you the signals, because it's the instrument where its price oscillator is nearing zero. In the case of silver, it's not. It's well below zero. It's going to take a lot of work just to get up to that level. So it's going to be gold that is going to give us a signal. Don't be lulled in if silver is performing well to think that that's giving you the signal. It's not. We need to see a test of Stevie's trampoline, that red line, in order for that to go ahead and give us the signal that you and I are looking for. Hey, with regard to light sweet crude, which was back, 30 cents or so is my recollection, or maybe down about 0.5%. The number here inside of light sweet crude is about 48.30. Give or take. That was on the June contract, so there's no way for me to get the July contract up on the screen because I got no data feed. But figure in that 48 and change range. If you see a close below that, then that's a problem for Texas Tea light sweet crude. And those are the numbers brought to you by, I don't know who it's brought to you by, but it was certainly brought to you by Stevie's son out there. Yeah, that's what it is. Well, we'll just go ahead and as our sponsor, that's what we really need as a sponsor. We need a sake sponsor. We need a cold sake sponsor, right? Then that would be a beautiful thing. Hey, look at this. The Internet just started back up. I actually have some live numbers. Now, I don't know how long it's going to last, but it says the Dow's up 43. The S&P is up about 2. The NDX is up 13, so at least I've got some live. It doesn't look like we've seen a lot of movement. We probably are not going to see a lot of movement. Maybe we see a little bit of movement after the Fed releases the minutes, and then the machines go through it and look for keywords and then figure out what to do out here. Watch, by the way, the level here. It'll be really interesting. 2404.50 has not been hit inside the ES Mini. That's a level of potential resistance. You see it close above that, and just take off the short bets altogether. Just simply get out of the way. It's a freight train coming at you, and I don't want you to get run over by a freight train. You already have the numbers to the south, by the way, so you know closes below what kind of signals they form. I want you to have hey, if you are short and you were to see it close above 2404.50 in the ES Mini, it's the only one that's got any real kind of resistance out there. Of course, the Dow is about 60 points higher, so don't be surprised if somehow the Dow responds, or the Dow stocks. Oh, you talk about a world of potential trouble out here. 50% of the Dow stock. Did you know that 50% of the Dow stocks, better if I frame it as a question, right? If you ask a lousy question, what kind of answer do you think you're going to get? Yeah, worse than lousy. So I should ask a good question out here. So let me ask a question. With regard to the health of the Dow, and I just have made, and I make a fairly large deal about where that price oscillator is, right above zero, below zero. We looked at this gold, so we know what it is that we're paying attention to. A rising price oscillator above zero offers the promise, not the guarantee, but the promise of higher prices to come. It certainly helps you to identify which side of the trade to not be on. So what percentage of the Dow stocks have oscillator readings above 0. Yeah, you're not going to get this right, I don't think. Maybe some of you are. Only 50%. Only 50% of the Dow stocks. That is a troublesome thing. It's not a signal that says go ahead and load up the truck and sell the Dow. But it's a problem. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We persevered. We've got 4 minutes to go. Hopefully the show has been somewhat entertaining for you, but factual, with a set of numbers that are very reliable to help you understand which side of the trade to be on. In summary, again, long term, we're looking for these markets to move higher, much, much higher. The NDX 100 is probably the place to be. Actually, I've broken that down into the best stocks. I should have it done in maybe about 10 days, so 2 weeks worth of time for subscribers with regard to the ultimate dividend stocks to own going into the rest of the year and beyond, but certainly the rest of the year, so that you can create your own indices, so to speak, to outperform the market. These are the ones that will. These are the ones that have been performing well. We'll have identified where the market should pull back, that provides us with good buying opportunities out there. In order to, because we really are in a nice stock pickers market out here. Doesn't mean that the indices aren't going to move higher. They are. But it would be much, much nicer to own the best of the best. You can just go back into 2000 as an example. As the markets ran much, much higher, you did well in owning the indices, but you did even better in owning the biggest names or the best names out there. In this case here, it's a lot of work. It's relatively simple in understanding the thought process behind it. It's just a S-load of work in order to be able to go ahead and pick out the best of the best. That'll both be the NDX 100 just as well as all of the dividend-paying stocks out there, and including some of the real estate investment trusts and some of the MLPs that I'll have. So it'll be all that work so that you as a longer-term investor, trader, will know what those best of the best are. And look, some of them are going to fall out of bed. That's what typically happens, but you're going to basically be able to create this portfolio that should outperform the overall industry. Would you like to do that? And along the way, earn some nice dividends out there. So that's what I have that I'm preparing for subscribers out there. And if you'd like to gain access to that as well as all this other information that you can use on a daily basis, my morning outlook before 9, usually it's about 8, sometimes it's about 8:30 in the morning, so you can really anticipate what the market is going to do. And I'm very good at being able to describe early in the morning what you can anticipate what the market is going to do for the rest of the day out there, and what to be looking for, just as you and I did here on a little bit larger scale, because we were really looking at the daily charts and levels to be looking at. So today, by the way, you've got Tiffany's, no blue boxes. If you were to go to Tiffany's today, they're selling red boxes. Red boxes because you've got a move of about 7 million shares or so, down 8%. So that's good volume to the downside, off 750. Looks like what Tiffany's is going to do is, first, 83.39 is the number. It's gotten down to as low as 84.15. Below 83.39, what we should see is move down to 78.71. That should be a pretty decent level of support. If it doesn't act as support, then there's some real problems inside that blue box land out there. But at this stage here, on a weekly basis, Tiffany hasn't really crushed through any significant support level. But as I say, close below 83.39, then you've got some problems out there. So, folks, thanks so much for putting up with me, or the lack of me, and the lack of charts. But hopefully I've done a good enough job, an excellent job, an extraordinary job of being able to communicate to you what the markets are doing, the price levels that you need to watch today, and stay tuned. Because our favorite polar bear, David White, he's up next. Because it's Wonderful Wednesday, you got the Tom O'Brien Show from 3 to 5. Have a great day, folks. Don't forget, it is, what is it today? It is Rumba Wednesday. Take care, folks. We'll see you on Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.